I am Corinne Cavanaugh, founder of CAC Media and Publishing, where we connect growth stage CEOs and founders with fractional chief marketing officers who can help them stand up revenue systems so that they can scale. And today we are talking about something most founders learn the hard way. What happens when you try to take your business across a border or bring capital back from one? And I have two exceptional guests with me. Hélène Bergeot, or Ellen, has spent 30 years leading marketing across 30 or more international markets, including Magic the Gathering in Europe and directing strategy for Squishmallows, Pokemon, Fortnite. At Jazwares, a Berkshire Hathaway company, she did a whole lot, which is pretty impressive in and of itself. She knows how global growth actually works, which markets are worth the investment, how to build local infrastructure that sticks, and how to translate a winning strategy into a new territory without losing what made it win in the first place. Next is Nela Costachi. She's a former Secretary of State, an exited founder, and an angel investor through HBS Alumni Angels of South Florida. She holds a Harvard MPA and has lived and built across 5 countries. Today, she works with European seed, pre-seed, and seed stage founders to build narrative, credibility, infrastructure, and U.S. positioning so that they can raise capital from American investors and enter into the American market with confidence. So borders are just the beginning, and I'm just so excited to get into it. The first question I'm going to ask these ladies is for both of them. So we'll just set the stage here. All right. The big picture. Let's open with the big picture, ladies. Both of you have spent your careers helping founders and companies succeed across borders. Nela, you've described the market as a translation challenge, where the idea is strong, but the signals need to be tuned for the room. Ellen, you've built brands across markets, understanding exactly what makes a strategy, especially a marketing strategy, travel well. So before we go deep, I'd love each of you to share what excites you right now most about this space. Let's have Nela. Go ahead and go first, please.
Yeah, thank you, Corinne. Hello, everyone. Hello, Hélène. It's very, very nice to be here, and thank you for the invitation. I think this work excites me the most because I usually find that it's not, founders don't lack talent, and there are a lot of great products on the market. But it's usually what I call a translation problem, right? Founders misread investor rooms. They don't know how to present their information in terms that the investors understand, or there is a lack of alignment, right, between what the founders are trying to communicate and what the founders are actually looking for. So I like to say that I'm the bridge between these two parts. And this is what excites me most when I see founders saying, oh, I never thought that they're actually looking for this, or wow, but I didn't change anything. I just changed the way I present data. And in the end, it's all about this. How do you interpret the room in the US across the Atlantic? Yeah,
that makes a lot of sense to me. How about you, Ellen?
Yeah, so also very, very nice to be here. So thank you for inviting us, Corinne. That's great to have the opportunity to share just like our insight. So the way I'm looking at things is a little bit more from a product perspective, but this is similar to what Nela was saying. So matter of just like of a really translation in the sense where there are a lot of companies who are looking at their products being successful in a given market and getting extremely excited about the idea of bringing it to other markets. But the challenge is like to understand what makes the actual success of the market, what in the mix has been like behind that success, because before making that analysis, it's very, very difficult to start scaling in other markets because the situation is not going to be exactly the same. So going into that, just like, deep dive and just like understand the road that has been followed, because sometimes just like, you learn more from failures and from success. And when people see success, they just like say, feel that success will follow. But it just like, there is way more than that. It's always about understanding the different components. Is it just like, what in the product exactly has been resonating? And exactly do we really understand to which type of audience? Where was just like this audience being just like being reached? Because it's not going to be like a recipe that's likely to work as such in other markets. So trying to just like to really break it down, look at all the different components. It's very, very exciting. It's super fun. And that helps really just like then putting that back in the context of the market that you want to enter, to look at just like what is going to be like the right ingredients to make, just like to reproduce that recipe.
I love that. I love that you're both using cooking analogies because it really is sort of picking and choosing what works best for the right market, right? So let's get into the investor side, Nela. You've been all on all sides of the table, right? Founder, investor, government official who negotiated international trade agreements. That gives you a pretty rare perspective on how trust and credibility are built across these different systems. So, when you're working with a European founder preparing to raise in the US, what does it look like to build the right foundation before they walk in the room?
Yeah, so I think the first thing is a founder needs to understand that US investors are not only evaluating the company, right? They are also evaluating your ability or the founder's ability to win in a very specific market logic. So in Europe, founders are often trained to sound careful, precise, and prudent. And this is a strength. And don't get me wrong, this is necessary. But in the US venture context, the same language can sometimes be interpreted as lack of ambition, just because the US venture ecosystem rewards speed, rewards ambition, and rewards courage. So if a founder says, we're growing sustainably, in Europe, that sounds like prudent, but in the US, this may be too slow for venture. Or we have a very strong technical team, but then a US investor may think, okay, but who is it selling? Who owns the US go-to-market? What does it mean, right? So the raise succeeds when the founder learns to communicate in the language of the market they're raising from, without, of course, losing their authenticity, because I hear a lot about, oh, but then I have to put up a show. No, it's not putting up a show. It's keeping your authenticity, but adjusting it to the market that you're trying to raise from or enter in, right? And then there's another piece that I call credibility infrastructure. And this is a signal that US investors wants to see. They want to know who else believes in you, who has validated you, who has opened doors, what market proof exists, why now, why you, right? Have you talked to a US consumer? A lot of European founders that have validated their idea in Europe think that they can bring that across the Atlantic as a signal that this can work in the US. And then, fortunately or unfortunately, when they come here, they understand that actually the product validation that they have in Europe doesn't necessarily translate into a product validation in the US, right? So they either come too early in the US investor market, they have a DAC, but it's not enough for US, right? The DAC or the pitch doesn't have the US relevant signals, right? No US customer discovery, no advisory network, no pilot conversations, no market entry thesis. at the end of the day, basically that's no clear reason why US investors should believe this company can cross the Atlantic successfully. So I always tell investors, before you start raising or before you're thinking of entering the market in the US, build the evidence that makes that raise believable. And that's even more important if you are trying to raise at Series A, right? Because at Series A, then the question is not about, is this a good bet? Or is this a product that and a team that can execute on the business plan? But the investors are asking, is this already working in a repeatable way? I can capital accelerate it, right? So at Series A, the founder needs to show evidence: product market fit, revenue quality, retention, sales, customer acquisition and retention, etc., etc. So it's very important to understand the market before you're trying to raise and before you have this really well-planned go-to-market strategy, because the investors are going to look for the proof, for the signals that you already have built, not that you will build in the future. I think this is my main message that I'm trying to convey to European founders.
Yeah, I love that. And so if you had to tap into what is sort of genuinely different about that narrative specifically, what does a pitch need to do to resonate with a US investor if you're someone coming from Europe? Is it a structure thing? Is it a story thing? The ask, does it have to be shaped a little bit differently?
So at seed level, the main difference is the following. US investors focus on the narrative, how big this idea can be. Can you show a big trajectory, right? They don't focus that much on the technical details. If you've got right, the features of the product, or the US investors will ask, show me the consumer signals that your features are the ones that the consumer ask. Whereas in Europe, we focus more on the technical details of the product without necessarily focusing on the consumer, right? Because it's a mentality of risk, right? The European market is a bit more fragmented. There's less money to invest in startups, so investors are a little bit more cautious with their money. In the US, there's this culture of, especially at pre-seed and seed level, of why the product or the solution, why you, and why now. This 3 points are super important, and if you cannot answer them in 3 precise, clear sentences, let's say the fundraising journey is going to be more difficult than you thought about it. And then second, it's about actually the fundraising process. It's not a scattered events, some investor meetings you have once in a while. It should be a system of fundraising, and most of the companies that are successful in fundraising, they create this momentum around the fundraise cycle, right? But they have it figured out. And of course, it's that founders then ask me, but then we shouldn't have everything figured out in terms of data. No, you should be very clear in your data. You should be very, very prudent in what you're presenting and what documents you have in your data room, etc. But you need to fix your narrative, because investors across the Atlantic like to hear or want to hear a story behind the product or the solution that you're bringing to the market. And I've lived it in my own shoes. I was completely startled when one of the investors, after I had a 10-minute speech about the technology I was building and how important it is, and how complex the technology is, he asked me, so why are you so passionate about this? What exactly in your life made you build this? And then you cannot come up with a story like, well, I saw this market opportunity. right? I'm not saying you have to invent a story, but if you don't have a story about you, then you take a story about a consumer that uses your product or service and make it about this story. So this is one of the few examples, but there are many more.
I love that. I think it goes back to a phrase that I've heard you talk about, which is this credibility infrastructure. And, how do you build that credibility, especially if you're coming from a different kind of framework that you're used to, maybe in Europe, and you're coming here and you're wanting the US investors to fund you. What are some key parts of that credibility infrastructure? Like, what are they looking to hear that you need to be prepared to give?
So do I answer?
Yes,
Yeah,
please.
so there are several, but I group them in four categories. So first, there is market credibility. Do you understand the US market deeply enough? Do you understand that when you say US market, this is not a general market? You have 50 something states, they're all different. Have you spoken to US customers? Do you have letters of interest? Do you have pilot customers? Do you know how buying decisions happen here? Do you understand the competitive landscape? And it is very obvious during conversation if the founder has this market credibility or doesn't. And if a founder doesn't have pilot customers, doesn't have a wait list, didn't put the product or the service on the US market, then it's clear that this founder has no feedback from the US market, right? Second is founder credibility. Why are you the person to build this? What gives you an unfair advantage? Is it your background, your network, your technical insight, your story, your regulatory experience, your customer access? There must be something about you as a founder that brings credibility. And then third, execution credibility. This is one of the most important signals that US investors will look at. Have you shown that you can move fast, learn fast, sell, iterate, and build momentum? And I think this is one of the main differences between Europe and the US. US rewards speedy execution. Whereas in Europe, if you take it slow, you bring more, credibility, and you bring more awareness to the process. Here, things in the US, things work a little bit different, right? And then you have to build a network around you so you can bring network credibility. In the US and the US venture ecosystem, everything is relationship based or networking based. It doesn't mean that you need to have, a rich friend or a rich uncle, or, be friends with top investors in Silicon Valley. No, but you have to have people around you, advisors, early customers, angels, operators, industry insiders, some signals that show that you have a network around you, because this reduces the perceived risk. And for international founders, unfortunately, or fortunately, network credibility is especially important. If no one in the US ecosystem knows you yet, the investor has to do much more work to believe you. So you need to deliberately build those bridges before you need them. I often say, do not start building credibility when you need capital. Start building it, 12 months before, because they're looking for, who knows you, can you scale, and can you scale it fast? And I think these are, one of the important elements that the US investors are looking for. And it is a little bit even more difficult for international founders, because the extra question, as I said, is, can this founder cross markets?
Mhm.
Because crossing markets is hard. You need cultural fluency, commercial strategy, hiring ability, legal awareness, emotional communication, etc. And all these things, if you have not been exposed to them before you're trying to enter the market, will hit you hard when you come here.
Yes, yes, that makes a lot of sense. Wow. I mean, for a founder who has real traction and their product, and they're thinking about everything you just said, That's a lot to do. That's a lot to prepare for. So, if you had to just name one, the highest leverage thing they can do to position themselves for a successful raise in the US, what would that be?
So at seed level is execution signals and understanding the consumer from the market you're trying to approach. It's very important to show investors that you understand the market, you understand the consumer needs,
Mm-hmm.
and why your solution is the best, and then why you are the person to execute on that. And it
Yes,
doesn't have to be because you graduated Harvard, MIT, or you worked at OpenAI, etc. But it has to be you because you worked, let's say, 15 years in the logistics industry or supply chain industry, and you know it inside out.
exactly.
You've
I, you
lived
know,
it, you know it from the inside, and you can talk about it, you can speak about it, you can show proof and small details when there is a Q&A that you are the person that knows best this market you're going after. There's nobody else.
I love that. And I've heard that before, right, from other investors in the room. They're saying things like, is the founder investable? Like, is there someone I can trust? So you have to make that case. And I love that you bring up knowing the customer and knowing the market deeply, because I think that's a perfect lead-in for questions for Ellen. That's the play really that she's double clicking on when she's thinking about going to market to new locations, especially international markets. So thank you, Nella. I'm going to turn it to Ellen, and we will go into a couple of questions for you. And based on timing, we'll just see if there's time for Q&A. This is really in-depth information, so I'm not sure there will be, but I think this is really informative. So thank you, Nella. Okay, Ellen, you've spoken about the importance of understanding why a strategy succeeded in a given market before bringing it somewhere new. So you tell me and the listeners, how do you actually do that analysis? What does it look like to extract that transferable insight from a successful campaign or product launch and port it over to where you're trying to go?
Sorry. So, yeah. So just like, yeah, because just like, everybody is happy when you see a campaign that is being successful. Your metrics look awesome. Just like you have, your digital thing works, click-through rates and stuff like that. But stopping there doesn't tell you the whole story about just like why it worked. And especially just like I've seen in a number of situations, it's easy actually to misread and not to look at the actual consumer. So very close to what Nela was saying. Understanding the actual just like behavior of your consumers is very important, because sometimes, just like as a marketing team, you want to think, we want really to market that product to just like, let's say the 14 to just like a 24-year-old, just like because this is where you have been marketing and you have some good results. So if you just read the results, yes, that seems to just like validate just like the choice, the decision that you have made. But when you start digging a little bit more, especially using social media listening, just like going on that level, but just like about being closer to the market, listening to your consumer, this is where you can just like have that better understanding about why you were successful and exactly which type of consumers, because there are some certain points in your just like positioning that might just like often actually that are way more just like valuable for the consumers than some others. You have this beautiful brand book that outlines that's how we want to talk about a brand, but at the end of the day, just like not everything resonates. And to be able to question ourselves by saying, let's take a step back and to really look at what people have been talking about exactly. Is it that feature that they're exciting about, or is it more about that? And of course, just like, sales is a very quick way of validating because the sales are there, but the sales are very, very just like short term, in the sense where that doesn't help you continue building your brand and just like, especially to identify in which direction to continue investing in terms of marketing. So having that deeper understanding about exactly the features, just like the points of messaging that have been resonating. That's how you can extract that and then say, okay, now I want to go to another market. Does that even make sense? Because there are some references that might not exist in the new market that you want to enter. But if it doesn't resonate directly, doesn't mean, sorry, that you need to change your brand book. It means that you have to figure out a better way of putting it together, just like a different way. So that's why just like, going too fast and trying to take just like, say, that campaign worked, just like, let's do the same. And just like, it's really a shortcut for just like having limited results. It's just like, it doesn't mean that it's not going to work, but, just like, it's more about when you look at the 3 or 6 months, just like, period, about the ability also about transforming your consumers into just like repeat consumers and also brand advocates, because ultimately just like Nela was talking a lot about networking, just like the importance about just like the power of just like knowing what other people are thinking, and it's still true, and just like it's still very much true. So trying to just like leverage that and just like not looking only at the metrics is extremely valuable to know how to deploy your marketing campaigns in other markets.
Yeah, I that makes a lot of sense to me. So, okay, when a founder or CEO comes to you and they're ready to expand internationally, what do they need to understand about their business when they're looking at what translated or what didn't? And how do they iterate on that? Like, should they be doing specific kind of testing, or what do you recommend for when they're wanting to go into a market if they're actually ready, and what does that look like?
So just like to go into new markets, just like it's all about knowing where you are going to set foot. So just like having some preliminary conversations with key players is always very important, because that gives you the feedback that's going to help you reassess if your approach is like the right one or not. And it doesn't mean that you have to change it, because most of the time it's all about the narrative, because you might want to just like to highlight some of the just like points that you feel that are very, very pertinent, but they are not resonating to just like to the markets where you want to go. As an example, just like a very quick example, we had an extremely successful campaign in Spain, just like where just like it was like based actually on distributing a product in kiosk. Kiosks are very, very strong in Spain. There are thousands in front of kiosks. This is where you buy your newspaper, just like your just like whatever, just like your candies before catching your metro. And so just like that company was very just like very, very just like strong about that, say, hey, we have that power about just like, being able, just like when we have that type of visibility about just like, being everywhere, just like, and getting just like in the eye of our consumer. The only thing is that just like that doesn't exist here. Just like, have you heard about kiosk? Just like, no, just like there is nothing similar. So you have to find something similar that's going to resonate in terms of building your narrative, because it's the same thing as if we were managing to just like to enter this type of just like distribution channels or the others, and that can be completely different. That can be just like saying, okay, maybe we're going to think about groceries, because just like pharmacies and groceries, it's huge in the US. It's not the same business at all in Europe, but just like maybe that's the answer, just like about translating something that has been working in the country, just like in another country. And you can figure out that by having these conversations about just like with some key players to better understand just like where are the opportunities based on the products that you want to present, because that can be very different, and you have always to think a little bit out of the box. And it's very difficult to think about that when you are just like still in your market. Just like you really have to get that intelligence, that understanding about just like where just like where is the potential.
One thing I love about this is you and Nella are both saying something similar, right? So Nella was saying if you are going to the US for investment, make sure you have a couple advisors, like be networking, have some advisors, have some people telling you what you need. And Ellen, you're kind of saying is something similar, right? Before you go splash in that market and throw funds there, make sure you have some people in your ear, maybe prospective customers, maybe just advisors, giving you the lay of the land so that you don't do something, a mistake, right? Like you're expecting, kiosks at the mall to be your primary revenue driver when they're just like tiny loss leaders for the mall. So I can see it, having that advice, an advisor in the space that you're going to is a really critical thing for early research. So that totally makes sense to me on both sides of the raising capital and also the entering the market. Okay, so switching gears a little bit, Alan, you built out the Wizards Play network to over 5,000 retail partners globally and launched Magic the Gathering in Europe. And so you directed strategy for a lot of different companies in a similar way. So when you're entering multiple markets at once, how do you think about sequencing and prioritizing the market?
Yeah, this is a very good question because just like often you say, okay, I'm going just like to expand, and it's more really looking about just like of course the size of the market, but most of the time it's really excuse me, the infrastructure, the market that matters most. Because just like sometimes starting with a smaller market, just like say, oh, I'm not going to go for Brazil, I'm going to go for just like Chile. Chile is still a very good large market, but because just like the structure of the market is actually more just like more ready. There is a readiness just like in that market for all the components that we are looking for in terms of just like the distribution channels, the type of just like and just like and the type of stores that you want to target and all the different type of elements, because just like it's again just like you can look at the numbers only, but that's not enough, because sometimes starting a little bit smaller helps you to put your foot on the ground and just like to also learn from that just like country, to be able to identify what you have to adjust in your approach, because you always have to adjust things. There is like no way just like you can say, okay, that's the model that works, and now we're going to make it just like to replicate over and over and over markets. So it's really identifying what are the key components. What are the key components for me, just like to just like to enter that market. What do I want? In terms of just like the consumers, do I have the right just like consumer base in terms of each target, just like education, whatever are the just like as your ideal consumer profile? What is like the ideal just like profile in terms of distribution? And so you map out what are the criteria, and that you can just like identify just like which countries are checking the boxes, and then checking these boxes from that perspective, even more than just like just like the number for just like the population and the revenue per capita and equivalent. And that actually can lead to just like some very interesting choices, because say, oh, why did you pick that country? So because actually on that list that was working, and you based on your result, again, that makes it easier to enter other markets that I might have larger just like population or just like higher revenue, but where just like there is not the same readiness in other areas.
Yeah, I like that. I like testing for readiness too. I think that's a tool that, you can think about it and you can talk to advisors, but actually do some market testing to figure out if it's really going to work. I think that makes a lot of sense. Plus then, if you're doing a funding round and you're wanting to tell the story, you can say, "Oh, we tested in this market and here were our results." It's like very solid. I think in both cases, whether you're established in attracting funding or you're established in just wanting to see if it's really worth standing up a franchise there, for example, that makes a lot of sense to me. Let's drill down into the U.S. market as our final question or two here, Ellen. So I've heard that the American market is genuinely different often, and there's an assumption that U.S. market validation translates elsewhere, and the reverse, that European traction signals U.S. readiness. We've talked a lot about Europe to U.S. Let's talk about how you think about US to Europe, right? So if you've got a US based company and they're thinking about international expansion, what do you think it takes to move that first line of business out to the US, and how do founders and CEOs really think about doing that successfully?
So that was for me, sorry, just like
Yes, that's for you.
no. Well, just like uh, there is always this cultural difference where just like say, and this is still massive. Just like of course, just like a lot of European companies, are not only European, because I worked as well with Latam, just like Asia, just like everywhere. They always look at US success being part of the dream, but then afterwards there is a little bit of uh, it's being cold feet into saying, yeah, okay, but do you understand what it means to go in my market? Because just like there is the perception that the way just like US companies are operating, they are just like that machine that are going to try just like to really just like do whatever they are doing in the US, doing it in just like in other markets. And sometimes you don't have to even go to just like to Europe, just like even going from the US to Canada, you feel these borders about saying, hey, don't misunderstand us. We are very different. Just like, yeah, we still have Walmart and stuff like that, but the consumers at Walmart in Canada is not the same consumers as Walmart in the US. Some subtle differences just like are super important to understand. And that's why just like, when you want to go abroad, it's to really just like leverage what is very strong with the just like the US entrepreneurship as well, being open, just like showing that enthusiasm, showing the fact that, just you are here to also to roll up your sleeve and just like work with your local partner to make it work. And that works. That's really just like that can seem very simple, but that's a way of breaking the barriers and not saying, oh, we have done it all, just like not believe that developing the perception about saying we have done it all, so just like we know how to do it. Because there are always things that can be reproduced. It's a matter of just like figuring out the right triggers, the right way of triggering that.
I love that. I love that. Partnerships are sort of a shortcut, I think.
Mhm.
You know, as we get on here, I'm going to ask a couple of questions for both of you. Okay, so we're moving right along. We've just got a few minutes left. So let me get into this. So for a founder, for this is for both of you, so I'll ask you both to respond succinctly. For a founder who's raising capital, raising U.S. capital and entering the U.S. market simultaneously. So maybe it's their first time coming to the U.S. market and they're trying to do a capital raise. How do those two tracks reinforce each other? So, what's the smartest way to sequence the work? Nella, how about you first?
Yeah, so it really depends on which stage you are. If you are, you know, pre or ideation stage, then it's one thing. You need to show an understanding of the market and maybe some market proof. Maybe you built a wait list. Maybe you identified this issue because you were a student here or something, right? So at ideation stage, when you don't have a product yet, it's a lot of assumptions that you need to make and show the proof, right? Here, I would go, of course, with angels because that's easier. At pre-seed and seed, especially in the US and, in 2026, raising capital is different than raising back in the 2020s even, right? So now at pre-seed and seed, you're expected to have a demo, a product, something. And now with AI that's been deployed and everywhere and anyone can access it and you can build a website, a landing page, even, an MVP, you can build it at no cost. And if you have a technical team as founders, then you are already expected to have put on the market a product. So you already have some consumer feedback. If you are at this stage, you need to do these two processes in parallel. You're building the product and you're already there having a system for fundraise. Fundraising doesn't happen when you already, validated your product or you have consumers. If you already have consumers, then you have to, and you are a profitable company, you have to really question whether you need to give up equity for capital, or if you need capital, what do you need that capital for, right? So these are processes that you need to do in parallel. Product deployment on the market and capital raising, because they both take time, and most of the time investors will, the relationship building with investors will take time. And it's very likely, unless you have some, very close network or somebody in the network, your network, can do the warm intros, but this doesn't necessarily mean you'll get the funds, but it cuts time, right? In approaching investors. But they will expect you to have a relationship built with them. So what does this mean, a relationship built? It means you are in their loop. You write them emails, you keep them updated about how your company goes, how many customers you attracted, who are the angels who wrote you a check, etc. It's very unlikely that you will get your check just after a cold email. So you have to take into account that it takes time, and you need a system to build that relationship, even if you're across the ocean and you don't have the funds to come here at conferences and be in Palo Alto or in Silicon Valley if you're a tech company, to actually be in the room with the investors.
I love that. That's a perfect segue for Ellen, right? Like, let's talk about systems and activities. Like, when a founder who is simultaneously, let's assume that based on Nela's recommendation, um, raising U.S. capital and entering the U.S. market, what can they do from the marketing department that will reinforce what's happening with the capital raise, and what are they doing at the same time? Maybe what are they holding off on doing?
Yeah, just like so, it's really just to go a step further to what Nela was saying. It's about building the narrative. You build a narrative, your case, by just like, your product is live, even if it's a small scale, and you build the excitement by having just like this progress, just like, and not going too fast is actually the key, because this is where, just like you are very, very just like open and honest about saying, hey, we're starting small, but you can start showing how it develops by just like consolidating the feedback from consumers, just like, and not only consumers, but also customers. Just like this is very powerful. If you start this, as an example, you decide to go through retail distribution, and it's not a major retailer, but you start just like going into the stores and just like looking at the story that is developed in the stores. That's going to be like very, very good elements to add the storyline about, how it can grow just like more and more, because just like it makes it more visual. Everybody's visual. You want to have just like something that you can relate to, not only decks and words and stuff like that, but concrete examples about what it means in the reality. And if you are not just going retail, sorry, if you are just like more an online platform, you will also find there some very, very just like early signs about what does resonate, what makes people exciting. And then, from there, as a marketing just team, you can build just like the narrative about how you are going to amplify that. Because of course, if you say, hey, that's a start, that's not enough. It's all about saying, that's what we learned. This is where we are going to continue capitalizing, and this is where we are going. And step by step, like this, you demonstrate the path that you are just like identifying for growing your company, your products, your activity, and you can just like just like drive your future investor through that path, make them part of the story.
Yes, I love that. I love that. When they feel like they're truly engaged in the story and the narrative, and they're kind of cheering for you along the way, that's what seems to work. Okay, this is my last question, and it is also for both of you. Both of you have lived and worked across multiple countries. Is there a cultural dimension to global growth that deserves a little bit more attention? We've talked about trust, how relationships happen before capital deals, the way authority and expertise can signal in different markets. What should leaders understand about cultural differences? So maybe Ellen, will you go first this time?
Yeah, sure. So, just like I will keep it short because that's one of the most fascinating things that I learned actually working in the different countries. So first off, just like the US, what I learned in the US is that the traditional hierarchy it's not enough. Just like I ended up in meeting rooms where tons of people had no idea who they were. They were showing up and giving their opinion unsolicited. And I was saying, what's happening here? So huge thing that I learned and has been very, very helpful is to manage just like horizontally, just like manage, understand your stakeholders. And then from there, just like, get them on board before presenting your idea to just like to the exec team. Because in Europe, you would just like go straight to the exec team and, your peers would have to follow. Very, very different way of just like making decisions and getting just like approvals or just like onboarding from here. And the other thing is like, it takes really a long time to hire, just like train people in Europe. Here, it's way more volatile. You are going to hire somebody just like you can hire in 2 weeks, but they are gone in 3. So building just like that understanding about, how you can also just like develop talents and develop your teams is a completely different exercise.
I love that. I love that. Anything to add, Nela?
Yeah, I actually have an entire stack on the translation, the cultural translation, because there are even sentences that you say them in the EU and in European countries, and they are perceived totally different here. But to be specifically for maybe, we have founders listening to this, I would mention, one of the key things that are important when trying to fundraise. So there are some assumptions that investors make. If you enter the US and if you found customers in Boston, it is assumed that you'll find customers in California and Washington, D.C., etc. Whereas if you found customers or a customer base in France, a US investor will not assume that you've conquered the entire European Union just because the customers are different, right? So if you show traction in, I don't know, Berlin, they will not assume that you have traction in France as well, or Spain, etc. Second of all, during the fundraising process, I think in Europe, we are taught to be reserved and modest in showcasing our success in a way, or what makes us successful. In the US, if you don't learn not to exaggerate your traction or your numbers or your data, but put it in a more positive context and talk about it, nobody will talk about it. So you really need to learn to make a case about where you're trying to build and why you need capital for. Second of all, then third of all, going back to that fundraising process, in the US, it's very normal to write 6 to 10 emails to the same person even if they're not responding back. It's just normal. And the ecosystem, the venture capital ecosystem, expects it. I've heard a lot of European founders saying, oh, but I wrote 3 emails, nobody responded back. It's okay. It's normal. You can write 3 more. Of course, you have to be respectful, and every single email has to contain different information. But if you've identified this investor, this angel, this VC as your priority, and you want to get into the room, you have to show persistence, right? In the US rooms, these are signs of persistence, ambition, courage, etc. Right. And I think this is like one of the main cultural differences, right? Because this is not, in European terms, this may be perceived as disrespectful, or as Hélène mentioned, you need to go through several stages of the hierarchy. In the US, it doesn't necessarily mean that, you can approach high-level people, of course, being respectful, because it shows, again, ambition and persistence and conviction for what you're trying to do. And again, in the US, the story during the fundraising strategy is around the narrative. In Europe, it's around the product. And especially at pre-seed and seed stages, this narrative is very, very important. And you are expected as a founder to lead with your narrative, not necessarily with a product. Of course, it goes without saying you need to have a good product, and et cetera, et cetera. But it's the way of showcasing what you're trying to build when fundraising. But I think there are many, many more.
Yeah,
Thank you.
there is a lot on that. And just to add something very, very short, but to just like add to what Hélène was saying about, just like the very different way, just like as an example, buyers respond in Europe and in the US is very different. I was in recently attending a convention where there were a lot of French founders here. And I was talking to them and we say, well, I was supposed to have 25 appointments. I saw only 5 people. And so they were desperate, say, don't worry, that happens. There are no show, but just like continue, be persistent, follow up. It's just like, because this is the mentality is so different that just like, if you don't understand that it's like, it's not you, just like, this is just a different way of handling business. And you have to figure out just like how to connect maybe a little bit differently.
Yes.
I think all Europeans that have been exposed to US system will say that's a different business culture. But not only Europeans. I mean, you have in Asia, you have a different business culture. So it's very important to tap in it before you're trying to enter the market with a well-established product, or you're trying to enter the market with as a founder. Yeah.
I love that. Well, I think that is a terrific conclusion to this conversation. Thank you so much for joining me, Nela Costachi and Hélène Bergeot. I really appreciate your perspective, and I know that other founders will too. Raising capital in a new country and expanding internationally, whether that's through licensing or partnerships or just a GTM, these are very difficult things to do. And I'd be willing to bet that you've got a couple of founders and CEOs right now listening who are just thinking about that next step and making that expansion play. And I bet they are grateful for this conversation. I know I am.